Hey, this is Arthur Hill, Chief Technical Strategist at TrendInvestorPro.com. It is Wednesday, January 27th, but this is being recorded for Thursday, January 28th. You're tuned in, of course, to Next Level Charting, where we're taking you beyond the charts and to the next level. And we're definitely going to do that today. Because what I'm going to do is I'm going to look at some breadth indicators for XLK, the Technology SPDR. They're available on StockCharts. I've put them in Amy Broker, and I'm going to back test them all the way to 2007 to see how it worked as a strategy to trade in the direction of the bigger trend. So let's start off with a brief explanation of the indicators we're going to use. Just going to be three. It's a very simple model. We're going to throw in a trend filter as well. So the first indicator is AD%, and that is the number of advancing stocks less the number of declining stocks divided by the total number of stocks. So XLK, the Technology SPDR, has around 75 stocks. And so if you have, say, 50 stocks advancing and 25 declining, that would be 50 minus 25 would be plus 25 net advances. And you divide that by 75 and you would get around plus 33.3%. Well, exactly, because 80% would be basically 33.33%. And so you would plot this on a daily basis. Now you can see the daily readings are quite volatile. You get a lot of plus 80% readings. That's the line at the top. And a lot of minus 80% readings. That's the line at the bottom. You can see here in late October, we had a couple of minus 80% days, but that was countered with that big plus 80% up day in early November. Now, I like to smooth this out a little bit to catch a bullish or a bearish breadth thrust. And I do that with a 10-day EMA of the indicator. And what that does is it tells you when you've had a sizable increase in upside or downside participation over a 10-day period. So you can see here in September, August, and then into September, then we had a bullish breadth thrust, and that gave way to this big advance. Then we had a bearish thrust in late February, and that preceded the sharp decline. And then we didn't have a bullish breadth thrust until April, but that gave way to a sizable advance. And we didn't get a bearish breadth thrust there in October, fell short. So this bullish breadth thrust since late April remains valid. So that is the first of the three breadth indicators. The second one is high-low percent, and it works under the same principle as AD%. You have the number of stocks making new highs, less the number of stocks making new lows. You subtract that, that's your net advances, and then you divide net advances by the total number of issues. So say if you had 11 new highs and one new low, that'd be 11 minus 1, that would be a plus 10, and you divide that by 75 to get your high-low percent. And that would be above 10%, more than 10% on high-low percent. And that's where my bullish and bearish thresholds are. So when you get above plus 10%, that shows enough stocks making new 52-week highs to support an uptrend. And you can see that was the case from May until early 2020. And then we got that move below minus 10% in late February, and that gave way to the decline. And then it took a while to come back, and it wasn't until June there that high-low percent got above plus 10% to go back into bull mode. Now keep in mind, these are trend-following type indicators, and that's why they're going to have a little bit of lag. And the third trend-following type indicator, the breadth thrust is really not that much of a trend-following indicator, but in new highs and new lows, you're in a strong uptrend if you're hitting a new high, so that makes it a trendy indicator. Same with new lows, you're in a strong downtrend if you're hitting new lows, so that makes it a trendy indicator. And the percentage above the 200-day EMA is another trendy indicator. And I use this as a longer-term trend breadth indicator. And I put my bullish and bearish thresholds at 60% and 40%. Now, I could put it at 50%, but if you use that, you're going to get whipsaws a lot. Look at all those whipsaws there. You can't avoid whipsaws by putting your lines at 60%, just above 50% for bullish signals, or 40%, just below 50% for bearish signals, but you're going to reduce the whipsaws. So you can see here that you would have had a couple of whipsaws there if you'd been using 50%. You would have had one here. You would have avoided those, and nothing you could have done here in April, May. It was just a lot of volatility there. But if you look at the signals, this indicator was bullish all the way up until late February, or actually early March it triggered. And then it got bullish again to stay bullish in May there, late May. Now I've got a second indicator on here, and that's the percentage of stocks above the 20-day EMA. And I'm using this one completely different. It's not part of the model, but I just want to show you the difference between, say, trend following and mean reversion. So trend following is you're looking for strength to buy into because you think it's enough strength to support a trend in one direction or the other. Mean reversion, you're doing the opposite. You're looking for weakness to buy into. And why is that? That is because you think that longer term uptrend is going to prevail and counter that short-term weakness. And so you're using it as a means to buy the dip. And if you look at this percent above 20-day EMA, when it dips below 20%, you have an oversold condition and you need to watch out for a bounce. We got that in May, June. We got that in August there, in October. So that led to some pretty good bounces in price. And then, we got oversold here, but then this indicator triggered bearish, so that eliminated that signal. And then we didn't get an oversold signal until September, when we got a couple of dips, and then a dandy there in late October. We got oversold, and then when you popped again, that gave way to this great rally we had off of the low in late October. So here is the trend following strategy for this sector, basically in a nutshell, with all three indicators: the 10-day EMA of 80%, high-low percent, and percent above 200-day EMA. And then I also add a trend filter. And this is the 5-day moving average, the green dotted line, and the 200-day in red. And the actual plot for XLK is invisible. So I'm looking for the breadth model to be bullish, 2 of the 3 indicators to be bullish, and the 5-day to be above the 200-day. So you can see it was bullish here in April, and then we had that bullish signal from 80%, but we didn't get a complete bullish signal from percent above 200-day until late May. So this model would have turned bullish there in actually mid-May. So you would have been bullish here for XLK, and then high-low percent came in here. Now, as far as that bearish signal in February, when it comes to taking a bearish signal, I'm an either or. So either the 5-day is below the 200-day, or 2 of these 3 breadth indicators are bearish. And you can see here in late February, you had a bearish breadth thrust. You had the high-low percent indicator turning below minus 10%, and then that was 2 of the 3, so you had a bearish signal there, and then 3 of the 3 in March. So where can you get great breadth charts like this to help you with broad market timing and sector timing? Well, I've got the Trend Investor Pro Essential Breadth Indicator chart list, and this has over 100 charts. It's organized in a logical top-down manner. I've got the broad indexes at the top, breadth indicators, and then I move down to the sector indicators, and there's the one I showed you for XLK, and I've got it for all 11 sectors so you can follow those breadth model signals. Now, this is available to subscribers at trendinvestorpro.com. Got a lot to offer here. If you scroll down here, you can see that I do a big ETF report on Thursdays. I do the market timing report on Fridays, and I have a video on Saturdays that basically wraps it all up. Plus, I come out with some articles and strategies periodically that are longer term oriented. But there's the bonus. You can get an ETF chart list, and you can get the essential breadth indicator chart list if you subscribe to trendinvestorpro.com. So please stop on by if you're interested. So here on this chart, we can see XLK, the 5-period moving average is the green line, the 200-day is the red line there. Here is the breadth model, and then below we have the 5-200 cross. And both of these are used for timing XLK here. So the green arrows show when you get a bullish signal triggered, which means the breadth model is green, and the 5-200 oscillator there is green. And then the red is when one of the two turns red or bearish. And so you can see you did get a whipsaw there, but a really good signal coming in May, mid-May. You had a nice signal there in the early part of 2019 into about a year into late February 2020. And then if we scroll back, we can see one of the better signals from the middle of 2016 until September of 2000 or October of 2018. But there are going to be whipsaws. You know, here's 2015. You get out, you get in, you get out, you get in, you get out. And so you would have been fed up with the strategy about, well, after a year of whipsaws, and you would have missed that really good signal that happened in July 2016. But, you know, that's just the nature of trend following. You have to take the whipsaws in order to participate in the big trends. And we know there have been some big trends in technology. So the reason we run backtest is so we can take our charting to the next level. In other words, you see what is there on the chart, but do you really know how it performed? Well, no, you don't unless you really test the signals that you see. And that's what we're doing here. So if we look at the compound annual return, it's 9.4%. Now, this is a big bull period, at least from 2009 until 2020, with a couple of rough patches along the way. The maximum drawdown was around 20%. And true to trend following, you had 50% winners and 50% losers, half the trades. But the way trend following makes money is you make more on the winners than you do on the losers. So you can see you would have had a few lean years in 2010, 11, and 12. But then you had a 20% year, an 11% year. And then look at 3 of the last 4 years, up 30% in 3 of the last 4 years. So it's been really a good period for technology over the last 4 years. Now, that might change. You never know what the future is going to bring. But with a strategy going forward, you'll know when to get out because you'll get a signal, and when to get in because you get a signal. And over time, you should catch some big trends. So I'm going to go further into this sector breadth indicator back test, and I'm going to do it for all 11 sectors on trendinvestorpro.com, and that'll be happening in the coming weeks. So thanks very much for tuning in here to Next Level Charting, and have
Hey, Grayson
a
Rose
great
here with
day.
StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.